please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The Nifty is back above that 11,400 mark, and Asian Paints is surging as we speak, so that's higher by nearly about 2.5%. But it's time now to talk about what's happening in the commodity and the currency market. The rates are just coming in, and Manisha Gupta joins in as always with a roundup. Hi Manisha, good morning.
Hi, and thank you so much for that. Well, we have seen the crude oil prices continue to be volatile. It was a 1% gain overnight, but we haven't been able to hold on to that. So on one side, you have the US-Iran sanction. The first stage kicks in today, and the markets really would be taking cues from that. And the other side, you have the US-China trade war concerns, and that is putting a question mark on the demand side of the global markets. So that is where you have the crude oil prices trading right now. Having said that, we have seen buying on the lower side. The hedge funds really seem to be increasing their long positions at these levels, especially in case of crude. 0.25% down is how the opening trends, though, have been. The gold and silver prices have been trading quite flat. Remember, we did see the gold prices decline all the way down to $1,204 per ounce in the global markets. That is a 14-month lows for that. And we have seen those pressures continue into this space as well. Just that the US dollar index is trading flat today, and we have seen some bargain buying or support come in for the precious metals as well. But for this week, for this month, we still are trading in the negative. The markets are anticipating a physical buying to begin in the third week of August for India. And China, of course, on month-on-month basis for last couple of months at least have seen good buying. So those physical numbers perhaps could improve the sentiment for this sector. The base metal space, there's one thing that's roaring, and that is the rebar steel prices in Shanghai, a 6-year highs, as we have seen electricity rationing, and of course the output curves would begin in the month of November. That has been supportive for the steel prices, and we've seen some bit of a buying in some of those related metals in the base metal space as well. The decline in copper is something that you have to keep an eye on, because we have seen nearly 15% of a cut in last 1 month itself. So some bargain buying is what we have seen onto that one. 0.5% up. Also, if you look at the LME and Shanghai warehouses, there has been sharp declines in inventories. The Chinese demand seems to be picking up, especially for construction, and that is where copper is getting its strength from. Trading strategies, we have them from Grow Value. They have a sell call across board in the metal space. What they're picking up is aluminum with targets of 136 on the lower side. They have a sell on lead as well. 142 is what they're watching there. And nickel also on a short side with targets of 907 for the day today.
Okay, Manisha, thanks a lot for that. We'll slip into a short break now. But up next, Devendra Shah, the chairman of Parag Milk Foods, will join in to talk about their stellar set of numbers this quarter. Hi, welcome back. As promised, we're going to talk about Parag Milk now. Devendra Shah joins in to give us a cue on the good numbers and what we can expect going ahead. Mr. Shah, good morning. Very good growth coming in on the revenue front. Even the gross margins have improved quite a bit. Just take us through what the milk procurement prices have looked like. What is the trend that you're expecting? And what kind of revenue growth do you hope to see over the next few quarters?
Yeah, we already giving the commitment into the analyst meet into the May month itself. Okay. Because our new expansion of the new management team, sales and the expansion of the sales and distribution, basically, and we adopt the TOC theory. Initially, when we started with the pilot project, and after the success, this pilot project, we expand our retail lines into the FMCG sector, and with both. Our drive should be very good.
So for FY20, for FY20, you have a sales guidance of 2,700 to 3,000 crores. But can you tell us by the end of FY19, what will your revenues look like?
We are giving the guidance for the 20% for the throughout the year journey, and even this current quarter is good because it's coming the Shravan month, some festivals, Ganesh. Yeah, all Govardhan ghee and other products sales are very good.
Mr. Shah, if you could tell us, how were the milk procurement prices in Q1 and how do you foresee it to be in the coming 3 quarters, say for FY19?
Yeah, the milk prices will the flat from the last 4 or 5 months because of global situation into the skim milk powder, but we are come out with this commodity product. We are into the FMCG business. Yeah, when the in some part in Maharashtra, because we are operating into the around 29 district in 4 states. But in last 2 months before, the Maharashtra prices little bit down. But intervene of the government of Maharashtra, they are supporting to the Maharashtra farmer to giving the 5 rupees pass on through our all products daily operating plants. Yeah, and it's a help to the farmer, it's help to the consumer also, and it's a stability for the any product manufacturing unit. Yeah, it's improve the milk production also.
So you're saying 5 rupees will be passed on to the farmers in Maharashtra, right?
Yeah, passed into the Maharashtra.
But this the government is giving. Do you have to bear any part of this compensation to the farmers?
No, government is passing through us only.
Okay. You spoke about a 20% revenue growth for FY19. Can you tell us what the growth will be for the traditional products and in the modern products like the whey, cheese, etc.? What kind of growth are you seeing?
Yeah, around 22 to 23% is our in the cheese segment. We are growing into the cheese segment. 22% we are growing 21 to 21% into the ghee segment. Recently, we add some new flavors and products into the cheese segment itself. And our new paneer, long shelf life with a new technology paneer, branded paneer, is well accepted into the market. From last 2.5 months, we distribute this products into the all metros. And basically, we've done the infrastructure into the first time into the country for the whey protein powder, whey infrastructure. And Avatar is giving the good mileage to into the new product range. Recently, whatever we take over the Danone plant from the Danone. In last week, we started this Danone operations, Parag, the Delhi operations. And we started the Crude operations from there itself.
So in the last quarter, in the quarter gone by, what kind of revenues did you do for the Avatar whey protein and what are you expecting?
Yeah, around our 3 to 4% into the whey protein we are handling into the with Avatar brand. Yeah, and rest of product we are right now supplying to the all baby food manufacturers.
Mr. Shah, can you talk a little bit more about skimmed milk powder? It's about 17 to 18% of your overall revenues. There was a sharp fall in the international prices of skimmed milk powder on account of a global supply glut, at least in the last 7 to 8 months. How is the situation right now and what impact can it have on your company?
Yeah, overall, in India, there is enough stock, plenty of stock is SMP, but some state giving the special export subsidy on the export. Even Maharashtra giving the 50 rupees a ton per kg to export the skim milk powder. We are around 12 to 14% into the skim milk powder, but we have to tie up with all pharma company, all chocolate biscuit manufacturing company. As we are not a worry about the skim milk powder.
Sure. All right, Mr. Shah, all the best for the quarters to come and congratulations on a good set this time. That's Parag Milk up 5.5%. They have a 20% revenue target for the full year FY19. Dixon Technologies is a stock on our radar. It's seen a 6% cut post its Q1 numbers. The margins have expanded, but really the problem is higher finance costs and in the mobile segment where the revenues have fallen quite a bit. Atul Lal, the MD of Dixon Technologies, joins us now. Atul, thanks for joining us. Tell us a little bit about the projections for the mobile segment, because there the revenues are down 75% this time. Should we expect more pressure?
In mobile, we are in the process of implementing a backward integration project of PCB assembly, and that project implementation will be completed by September. Now, we feel that that's going to lead to a significant margin expansion. And also, there is a large traction from the various customers because they are going to be one of the very few PCB assembly manufacturers on mobile front in the country. So we feel a significant recovery would take place from Q3 on the mobile side also. And one large account which was not doing very well, has been taken over by our partner as a brand SNC. So I feel that from Q3, mobile would be on a significant recovery path.
Atul, good morning. You have given a 20 to 25% revenue guidance for FY19. If you could give us the guidance for your individual segments, say lighting, washing machine, television, reverse logistics, as well as mobile phones for the full year?
I feel that in lighting, the revenue growth is going to be around 10 to 12%.
Okay.
In washing machine and in consumer electronics division, it's going to be higher than that. It's going to be around 25 to 30%. In mobile, I feel it's going to be flat. And in reverse logistics also is going to be flat. But also a significant growth is going to come from a new project of security surveillance systems. So I think overall is going to be significantly positive.
Okay. Can you tell us a little bit more how much the security surveillance could contribute in FY19 and thereafter, because it's a new business for you?
So I feel in this year, the revenues for security surveillance systems, because it's in a partnership mode, in Dixon's balance sheet is going to add around 200 crores.
Okay. You've also guided for a 70 to 80 basis points margin expansion overall in FY19. How much of that will come from the mobile business itself? Because you did mention that going ahead, margins are expected to expand in mobiles. And can you also tell us about the other businesses? What kind of growth do you see in margins?
So if you see our Q1 results, there has been a margin expansion of almost 0.6% on the operating profit side. I feel that the margins on the mobile are going to go up to around 3%, 2.7 to 3%. Okay. And the kind of number that we had given on the margin expansion will be sustainable.
Okay. Your finance cost has gone up 70% on a year-on-year basis. What is the reason for that, and an update on the overall debt on the company's books?
So there has been, if you see the working capital cycle, we maintain it at negative 2 days. There has been increase in the finance cost mainly because of increase in the bill discounting on our various customer side. The debt has gone up slightly. It's an insignificant increase, but it has gone up slightly, primarily because of some capex and also the business increase. Apart from mobile business, if you see, the revenue has been almost 33% in our standalone company. So that requires more working capital. So there is some increase in the borrowing.
Okay. Just one final question then. On this white goods segment, what kind of growth do you see? Because you have been looking to expand your washing machine manufacturing capacity as well. In general, what kind of growth rates are we looking at for you as well as for the industry?
Well, in our case, I think the growth in this segment, if you see, in the first quarter is almost more than 75%. We did last year almost 525,000 machines. We feel that this year is going to be more than 700K plus. So it is a significant growth, almost 35% in washing machines. The industry growth, I feel, is somewhere is going to be high single digit. So it's in Dixon's case is primarily because of acquisition of new customers and getting a greater share of our existing customers' business.
So to service this 35% growth that you're seeing, would you be looking to increase your capacity further? I mean, any kind of investments that you would make, or are you done with capex, capacity expansion?
So we've already expanded our capacity. Last year it was around 750K. Now we're at 1.2 million. So in this particular SKU, that is a semi-automatic washing machines, the expansion plan has been executed. But now we are seriously looking at implementation for top loading fully automatic in our Tirupati plant. So that we expect to execute by Q3 2019.
Okay. All right, Atul, we'll leave it at that. Thanks so much for joining in. So that is Dixon Technology guiding for a 20 to 25% revenue growth and margin expansion of 70 to 80 basis points in FY19, with the mobile business recovering back to growth by Q3, with the consumer durable business seeing a growth in excess of 20% for the full year. For the market, keep your eye on Axis Bank. It had seen a 10% rally in a span of 3 days. Even early in the morning, it was leading from the front foot, but some profit booking has come through in Axis Bank. So now it's flattened out, off from the top of the day. And the Adani Group stocks are getting hit quite bad. So Adani Power, where the net loss this time has expanded by more than 400 crore rupees. So that is weak, down 7.5%. And even Adani Ports is seeing a big knock of close to about 4%. But on the benchmark indices, absolutely flattened out.
Oh, absolutely. And you know, the consumer space is picking up quite a bit. Your Bata, Berger Paints, Titan, all of these stocks have suddenly picked up over the last 15-20 minutes. So I guess some trades coming back over there. Look at Bata now at the high point. But as we wind down on Bazaar, we will leave you with an exclusive chat that my colleague had with the Principal Economic Advisor Sanjeev Sanyal at the Ashika Group Investor Meet. So we asked Sanyal about how the Sashakt scheme is similar to earlier versions and whether the AMC concept will work or not. Thanks for watching Bazaar.
This is not an attempt to go outside the IBC framework at all. Sure. The IBC framework is the ultimate framework. What we are doing is creating the wider ecosystem for this. The reason we have to do this is obviously we don't, and particularly with the February 12 circular, we're going to have many cases now being coming. And of course, as I said, a lot of these assets have now been recognized and written off. But we have to do something with them. Now, we don't want the NCLT to get jammed with every small little case that comes along.
But wasn't something like this already existing under the JLF framework?
So the JLF is probably what is the nearest to this.
Okay.
So they have, yeah, you can say that we have taken some JLF type thing and created it, because after all, we got rid of those acronyms, which are all very confusing. So we have now created a clear process, and this is, you can think of it as the upstream of the NCLT process.
Coming back to the large cases, 500 crores plus, now to prevent absolute, the ultimate liquidation happening, under the IBC purview, the idea is to try and get an asset manager of sorts instead of a bad bank. How will this AMC function? Who are going to be the potential investors? Because, I mean, asset reconstruction companies have been around, funds have been around, international funds have been around. What is it that will make them come in now and start taking interest in these
there are
assets?
obviously many asset reconstruction and companies of various kinds, globally and inside India. Edelweiss is there internally. We have, I think, Liberty House and various others. So there is a whole bunch of people who do this kind of thing, and they are interested. And more will arise. And in fact, it's not just this. We have to create all kinds of other things. We need actually people specially trained in turnarounds and managing these processes. So we need insolvency professionals. We need to create courses for them. That's something that IBBI, for example, is working on. So there's a whole ecosystem that exists worldwide. We now have the legal system that is by and large working, and they're creating processes. And we have this whole ecosystem.
At any point in time, in this AMC which is being envisaged, would the
There's not ANC, it's an ecosystem of AMC.
An ecosystem of AMCs.
An AMC would be the same old bank bank idea.
Would the government be thinking of putting in any money in this?
This
not
is,
at all.
no, not really.
Okay.
I mean, public sector banks may do it, they're government owned, but government is going to sit and try and figure out which company should go where? No, we don't have the capacity. We are basically creating here to create frameworks.